Take me out to the ball game. Southern Missouri Bancorp, a component of the Russell IWM ETF, the Russell 2000. And it has been on a tear since 2009. Sideways move, 12-month moving average, going up, hogging it. Look at how beautiful that is. Except for that little period here. And when you get those closes below, it's kind of a sign to step away. Don't waste your time. So it's closed below. Just wait for it to give you another single. Then you would have saved 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You would have saved about 12 months for that to break out. So that's a lot of time. Your life is not infinite. So you want to be precise. You want to enter when you have the highest possibilities, lowest risk environment of having a breakout and really maximizing your gains over time. And look at that, hogging the 12-month moving average, never closing below it. Look at that, just beautiful. Step up, sideways move, step up, sideways move. But you see, and this is a telltale sign that high volatility, these big green candles, they're awesome, give you thrills, but you can get killed by the following. When that wakes up all those sellers and say, oh, what's up with that? Overvalued, selling, buyers coming in, saying, no, you're wrong, the seller's up. And then you're in this high volatility environment. And this month, right here, February 2018, you're out. Even it goes up here. Even if on the intro, it goes monthly all-time highs. Look at all that volatility. So from that exit here, yeah, sure, it got high. But after that, you're in a sideways move. Big candles, red candles, green, long wicks. That's super messy. But it finally irons itself out. Okay, there's a couple of things right here. So we have that breakdown right here in progress. So March, if you close March below open 33.56, close about 33.50. If you close below that, then that top is going to be crystallized. Implied measure move added to the breakout line. Price action below declining 12-month moving average. I repeat that terminology or those characteristics because they're all part of a stage 4 decline, a downtrend, bear trend, whatever you want to call it. And here is some, could even close below, and that'd be pretty sweet if we close below that. And further away, but still 1, 2, 3, few months testing that support. So it could actually close a month above that. That could be some resistance, that some support that's we're sinking through now, but we could actually close above. You still have that confirmed breakdown here, but if you close above this line, it just means that you might get an opportunity for a bounce off that support, that resistance turn support, that resistance, that support turn resistance. Man, my dyslexia killing me. And here we could have probably maybe get a good low risk environment for a high reward. That 12-month average, moving average declining, catching up, and us bouncing off this resistance area. So we'll just have to wait. If we don't, then this is a confirmed breakdown. Then we get an even bigger target. Whoop. It's always more fun when you test it multiple times, and that target added to the breakdown line, bringing me to those 2015-16 area. And always draw those monthly chart support areas, the walls, previous resistance turn support, and then the natural support. So when you have a swing rule, a target there, always take in consideration that you might slow down here. Sure, you might wick it through on the daily or on the weekly, and after that you could have a close above. So if you're playing the swing rule, you could take your profits once you start entering that area just above. And if you're doing the stand way or stage analysis way, you just expect, this is how I could see it happening, just expect hitting those areas and bouncing up those areas, and giving you areas to enter once again on that way down on that declining 12-month moving average. So definite stage 4 breakdown in progress, declining 12-month moving average. For that to revert, the price action would have to close back above this breakdown line. Then you're back into stage 3, and then you'd have to close above, I'd say, these highs right here. And then you have a big top pattern, which could be a base also for a continuation on the uptrend. But for now, if the 12-month moving average is going downwards, that's what we're going to be looking at. Here's my Russell setup, stage analysis. I have my Ichimoku cloud. I got my Mansfield relative strength indicator, but comparing it to the Russell, and we want red. So the Russell, we know it's underperforming the SPX and all the other US indexes. And now we're going to look at stocks that are underperforming the Russell, and look at that, just bleeding red, really underperforming. So the Russell, you think it's going down? Well, this smbc ticker, it's going down even more, so why not short that? Had a nice top pattern, nice stage 3. Trying to go back up. Didn't quite make it here. Got some highs. Oh, and that one's the whipsaw action. That's the smaller time frame. Oh, going back out above. You should be out. So if you shorted before, your timing was off, you're out. You still have that Ichimoku cloud serving as still support, but still not helping you. And after that price action goes back down, then you're back down below the declining 30-week moving average. And now that's what gets our attention. So sometimes you feel burned. I'm not looking at it again, but it's a cruncher. You should look at it and just to see how it evolves. These situations, these glitches on the smaller time frames, they happen. The best stage 4 declines or stage 2 inclines, they don't do that, but sometimes they do it. So you don't miss out because you had that piercing above high in the clouds, and then back down when the gravity and the reality sets in. Look, there's no more support. We're starting to develop some resistance here. Ichimoku cloud going downwards, 30-week average going downwards, lower highs, weekly close below weekly defined support, weekly close below monthly defined support, so that we're going to see how the month ends. And if we want a best risk to reward entry, red volume here, big warning signs. Some strength here. And look at that. Let's just take a look. I just want to see the details of this candle right here. See that high wick? Lots of green volume. I like zooming in on the smaller time frames to see. Oh, look at that. See some details. I'm going to move mine. So big green volume, but look at that wick. And if we zoom in on the shorter time frames, where did it start? The 24th, 23rd. That is mostly red volume right here. Wow, not a lot of volume for this. Let's go back, Russell. What is the volume? Oh, not super duper lightly thinly traded stock. So that's how I see breaking down. So we're gonna wait, see the month. If we get a pullback here to these to this monthly defined support, and if we start turning back down, we'll get a better risk reward entry here. And that's how you scale in. This one was early. Right here, if we manage to go through all this noise, then this one's going to be good. And down it goes, bounce back up. Right here, if we get close to that monthly defined support, turn resistance, and off it goes. Until, you know the drill, stage 4s don't last forever until the price action finds more buyers, and then here you're out, worst case scenario. And that's all it is. So use those swing rules. Important support. You might hit through these areas. Stan used it. He took some positions off the table when he hit his swing rules. They're pretty accurate. But if ever there's a crazy crisis and you just sink through those, then you have your stage analysis that's going to permit you to stay even longer in the trade. All right. So smbc, nobody knows about it. Not a very popular ticker, but I think that's even better, guys. Short the obscure targets. All right. Ciao.